Greetings, everyone. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. Brief bio is I'm a professional trader for 20 plus years. I've basically been in the markets. I've seen it all, done it all. I have a God-given ability for technical analysis. And many of the other presenters and others talk about you can't anticipate tops and bottoms. Well, I'm old school in that I anticipate, I don't predict. I leave predictions to the prophets, but we anticipate and we can expect reversals and we can expect tops and bottoms. But no, he's right one thing, you cannot always claim a true top and bottom, because what a reversal might go up a few ticks and then go back down and go further. But that's where the multiple time frames come in, and where it comes in, we're going to show you in just a moment. I'm the creator of a one-of-a-kind custom trading software we call the MPA-PE3 software. I founded GPA Trading Services 7 years ago. What's different about our firm is that our members have been with us from day one. When they come on board, the program is so successful, they stay. They don't come in for a minute and leave because they're not getting the results. They come in and they stay year after year after year after year. And if they weren't getting the results, then they wouldn't stay. So keep that in mind. Educated thousands of students over the last 10 years. I've conducted numerous live events, speaking engagements, a platinum program. I've also conducted multiple one-on-one coaching and mentorships. This is our website at gpatrading.com. We welcome you to peruse it. We're very proud of our service and the results that we've acquired over the last 7 years. Now, let's talk about today's topic. How can you supercharge your trading results by anticipating future market conditions? Onus on the word anticipating. We don't predict it. We anticipate it with unbelievable accuracy, and we'll get into some of that in a moment. Just a brief disclaimer. This is your traditional disclaimer, so I won't read it all, but I will take a moment while you're perusing that disclaimer. I'm going to touch on a few points. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. Persons should only use funds that they can afford to lose that fits within their overall financial plan as developed by a qualified financial planner. My rules are never risk more than 2% of an entire account balance on any one given trade. For options traders, we never risk more than 5% of your entire account balance on any one given options trade. And always, always, always adhere to strict, proper money management. All information in this presentation is for your educational purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy, sell any specific investment. Trade at your own risk. Now, the key components in how do I go about anticipating future market conditions? And I don't care what market you're trading, these are the same and they apply to all the above. First and foremost is support and resistance. How are you going to buy something if it's not on support? How are you going to sell something if it's not against resistance? So understanding support and resistance is a critical component. Trend direction. Trend direction is also important. One thing the previous presenter said, you should go in the direction of the trend. Yes, there are techniques you can use with high probability outcome, trend trading, and then we have also against the trend. It's when the time frames shift. That's when you can scalp, as we like to call it, whether I'm scalping in any type of market, futures, Forex, ETFs, commodities, you name it. You tie in, and this is a critical component, utilizing multiple time frames. You ever question why price action tends to move in a stair-step fashion? I don't care how strong the trend, no matter what the technicals, the fundamentals, everything say, it's still going to stair-step. It never goes in one direction. Others call that the ebb and flow of the market. Well, this system takes into consideration all the buys and sells in the market. We have a money flow indicator, and we have some other parameters that look into the multiple time frame. Well, this system is so unique that it's unlike anything else out there because it has a brain. It looks left to the lower time frames, it looks right to the higher time frame, and it's aware of what all time frames are doing to then generate our buy, sell, take profit signals. And this is the key component I was just elaborating on. Understanding how the lower time frames cycle within the larger time frame, as we like to call it, the line of progression. Now, normally I would sit here and go through several slides and show you how and what we mean by aligning time frames. But instead of doing that, let's just go right to the market and show you firsthand what the software looks like and what type of indication and signals you receive by utilizing it. We'll start off in the Forex market. We trade all markets, but here's the euro dollar. I've been telling my students as we were watching this go higher, we're watching the time frame cycle. And once they start to cycle, we'll get indications, signs, and symptoms of when they're ready to reverse. And that's based on the lower time frames. Well, this system is we call the PAI hook and cross pattern. Some people say, well, you know, indicators are lagging, they're leading. Which one? All indicators are leading or lagging. There are none out there that are leading. And then some will say you have leading indicators. Well, this is part of the cycling time frames. This system takes into consideration we're looking at a weekly. And based on the signs and symptoms of what this weekly is doing, you can automatically tell what the daily is doing. This system is built through thousands of lines of code that looks and knows what the lower time frame's doing, arranges the time frames, and automatically sets for the higher time frame, takes that in consideration. One thing I'm going to point out today was we have numerous tools available within our software system, so there's no way I can spend in 45 minutes going over all of those. I can barely cover one. And there are literally 10, 15, 20, 30, 40, 50 different type of systems within this. They're all tie into the one system, the trend momentum and the price action indicator. See this green line? That is money flow. It has that name for a reason. When the markets start having more sellers than buyers, it goes down. Whether it's technically relevant or fundamentally relevant, it's what the traders are doing. That green line is an indicator of where market is flowing. If it's down, there's more sellers than buyers. If it's up, there are more buyers than sellers. Well, a lot of that has to do with what time frame we're on. Because if I'm on a 5-minute, I could have a green line that's straight up, but in the big picture, we're clearly going much lower. Well, that's what we call about the ebb and flow of the markets. And as we started talking about this, as we were climbing higher, I said, be careful up here. We're going to get a reversal. Now, am I going to say that the euro dollar will never cross this high of 120.92? No, I personally think it's going to make a higher low and a higher high, but we'll wait for signs and symptoms to unfold as the time frame cycle to give us indications whether this is going to be a higher low and a higher high. Well, where does this come into play when I can start anticipating in advance where price is going? We like to use Fibonacci's. And when you get a PAI hook, which is a PAI is labeled right here, the top one, including money flow, when it starts to hook, meaning it turns down from overbought or it turns up from oversold, price is going to move in that direction. The question is, does it move for a long period of time or is it going to move in a short period of time? Well, based on the hook and the cross pattern, you'll notice previously we had a hook here. It went down about 250 pips and then reversed. And it slingshotted, this phenomenon we call slingshotting, back up. It hooked again, but we didn't get a cross. We hooked again, we didn't get a cross. And I kept telling students, yes, when the daily switches direction, you can scalp that to the upside, and it may even make a new high, but it's not going to make one by very much. This weekly is overdue to shift down and run down to oversold territory. So just basically, these indicators run, and their job is to go from one extreme to the other, from oversold to overbought, overbought to oversold, oversold to overbought, overbought to oversold. And both of them do it together. When they're in the same direction, that's when you get the strongest moves. The steeper the slope and the more angle and separation of the crossover, the stronger the trend. The steeper the slope of money flow, the more buyers there are to the upside. The steeper the slope to the downside, the more sellers there are. I've seen other people like to use volume. Volume is built into these two indicators. So not only do we have money flow from real data coming in, but we have volume coming in to tell you if it could be a strong move or not. And depending on the slope and the angle, that has more volume pushing down or more volume pushing up. So watch where the euro goes in the next several days. It's going to go down here. Is it going to go straight down? No. As I told my students this morning as it was pushing lower, I said, look for it to bounce a little bit over the next several hours because we're in the process of the lower time frames reversing. And when you get these reversals, this is not calling a bottom, but this is giving you an opportunity. It's like, hey, what's your goal? What's your ultimate goal trading? Do I just want to make a few pips, or do I want to be in these for longer term that sits there and I can ride the trend? Notice the slingshot phenomenon. The lower time frames will exhibit this behavior much higher and greater probability when it's going in the direction of the higher time frames. And when the 1 hour kept doing that, it kept doing it because my 4 hour was headed down. My daily as of late has been doing the same type of behavior. We call that slingshotting lower. Well, why is it doing that? Because it's following the direction of the daily. And my daily will eventually follow the direction of the weekly, which is where we started our conversation. So how can I anticipate what's going to happen in the future long before it does on the highest degree probability? It's based on the signs and symptoms, especially when you line up the higher time frames. So this behavior is going to be repeated. If this weekly continues to push lower at this steep slope and continues to separate, as we see over here, where we call this little angle in separation, where the green line crosses below the red, we can see green is just starting and it's already dropped 350 pips. A little bounce. So what's the technique and what we like to call my tactic for trading the euro? It's selling 4 hour slingshots until the daily reverses. And then once the daily starts to depressurize against the weekly, so let me, as I'm saying it, as long as my daily trend momentum and PAI are down, your tactic is to sell the 4 hour slingshot over and over and over. So how's that important? It's important because once we get these little PAI hooks, whether you're talking up or down, it automatically tells you the lower time frames are in alignment. So when I have a 4 hour turning and hooking, it's telling me automatically that my lower time frames are shifting toward the upside. That's the whole reason behind this hook. And notice as we go from the 4 hour to the 1 hour, it's starting as it started to bottom, right? So I'm watching both at the same time, and as it's starting to bottom, my 1 hour is reversing. My 30 is reversing. My 15 is reversing. So while we're watching the bottom reversal, we're not calling bottoms. We just know the ebb and flow of the market is going to start to stair step back up. But it's not going to go on and make new highs. How? And why would I say that? Because there's no way it can go higher and break a new high without the daily reversing. And if my daily doesn't reverse and turn, then this 4 hour is going to be forced. Well, in advance, we know it's going to be forced to keep slingshotting lower. But those of you that want to trade and get little PAI hooks, can I trade that from the swing point low and take it and scalp it? Sure, but the bias is not to go way up here. It's to make another lower high and another lower low, as we've been watching the last several days. So in yesterday's class, we were watching the euro do the same thing, give a little bounce, and I said, look, it's going to slingshot lower. The next day in class, I said the same thing. Look, it's going to slingshot lower. So as soon as the time frames get overbought on the lower scale, sell it, and you're going to see a 4 hour slingshot lower. I called it even before it formed, much less executed and did exactly what we said it was going to do. So watch the euro in the coming days as it will continue to slingshot lower and lower. As my daily moves into the rest of the week, it'll eventually start to turn up. But once it does, yes, you can scalp that too. But is it going to go all the way to overbought and force price to make a new high, or is it going to slingshot lower? That's where the weekly comes in. When my daily starts to retrace, if the weekly says no and doesn't turn with it, then 100% you're going to see the daily depressurize the slingshot lower. And you're going to end up with another lower high and a lower low. That goes and works on all. I heard S&P, there's no way to call a top and a bottom. Oh, well, I'm talking ebb and flow. This is not the all-time top. It's going to make some new higher highs. But the question is it going to do it now, tomorrow, next week, next month? So we just know when the ebb and flow is going to happen, so you trade it accordingly. And I'll go to the software on this one, and it shows pretty much the same question. I told my students as we were pulling back to this low, I said, look forward to the next couple of days. This is going to engage higher. Why would I know something like that in advance when the markets are going lower? Because which direction is the higher time frame? It's up. So the tactic for the S&P is to buy daily 4-hour slingshots, but take aggressive profits. It's going to do a lot of chopping. Yes. And the monthly is grossly overbought. Well, you know, oscillating indicators don't work in trending markets. When you marry them to money flow, ebb and flow of the markets, combined with our slingshot phenomenon, it certainly does exactly that. It is the best software out there for long-term trends. Now, every time it turns over, you don't know whether this is going to be a major top and reversal and continue lower, but you will know as you're moving lower and scalping that move, whether it's destined to go back up or it's destined to keep going, based on does this continue to move from overbought to oversold, or does it force this to slingshot back up? The key component here is every time you get this slingshot phenomenon, it's the end result of the lower time frame switching directions. So we're talking on a monthly. There's no way this monthly engages up in any of these without the weekly switching directions. So the most recent one was this small one right here, which we can see it didn't turn and engage back up until the weekly turn, but I'll call your attention to when we had this little flash crash. Ooh, that's the big one. I remember seeing the big down days, flash crash. And I was watching this and I said, maybe a flash crash, but we're oversold on the weekly, and once this PAI hook, you need to be long. Whether it's going to go to a lower high and force a slingshot back down, or it's going to go all the way back and start slingshotting higher and higher. The signs and symptoms are there each and every time, no matter what the market. Here's an example of another Forex trade. We'll go into oil and some of the other ones I mentioned in my topics point. I'd give you some tradable ideas. The euro is going to go down, but sell the rallies in a downtrend. Pound AUD is a currency we're currently in. We called this live in class over 820 pips counting, and we said based on the same scenario, what's the relationship between a PAI hook and a trend momentum cross? It guarantees once you get the hook and the cross, you're going to get at least a Fibonacci sweet spot retracement. On these higher time frames, from that swing point low to our 38.2 was about 500 pips, a low of 61.60, and we got a 67.27, about 500 plus pips, almost 600 pips, and I called this in class as it started to reverse. What does a PAI hook and a trend momentum cross equal? A Fibonacci sweet spot retracement minimum. But unlike most, I can't say whether this is going to stop or it's going to keep going. I personally think it's going to keep going. Why? Because my weekly is reversing in a strong slope, angle separation, and look at what it's forcing the monthly to do. It's forcing the monthly that was engaging down to fail. What does that mean? It was pushing lower, and now it's starting to turn back up. So guess what? Here's your tradable idea. No buy, sell, the whole recommendation. This is what we're doing, and this is what I'm doing. I'm continuing to let it run. It's going to run up here to 176.50. That's where my previous swing point is. Why there? That's where it started to reverse and what we call engage down. Now that it disengaged, we have the highest of probabilities it's going to run up here. Well, the only way this doesn't continue to push higher and continue with the monthly up is for the weekly to change directions. And if my weekly doesn't change directions, then I continue to buy the dips in the uptrend. So the tactic for this one would be to buy that daily slingshot. Well, Gary, it's starting and it's pausing at the moment, but it's still up. This is the behavior you would expect it to continue over the next several days. And yes, the daily is going to depressurize, and you could run a new swing point high to swing point low to swing point high and look for a Fibonacci if we get a hook and a cross. Where we got a hook, but we didn't get a cross, it was flat. So we didn't quite dip. Let me show you what that would look like. It didn't quite make it all the way to the sweet spot, but it came close, right? My sweet spot starts at 38.2. It went very close and reversed. But why did it reverse? It started to engage back up. Well, what is another way of saying that? Back then when it reversed, my 4-hour reversed as it was pulling towards the sweet spot. It reversed because the 4-hour changed direction. And you get that well in advance. So this system is aware of that. Well, I'll go one step further. If you don't want to place the trade manually through our trade system, you can actually let the system trade it for you. You can enter the criteria and say, I want to buy the next slingshot, I want to buy the next reversal, PAI hook, and it'll do it for you. Or I do it in class all the time when I see the hooks and the crosses. I give you targets, I tell you exactly what to do. I go on in what we call painting the Picasso. This software I've been trading for so long with thousands of students around the world with such success that I can anticipate exactly what it's going to look like for price to go exactly where we expect it to go. And if it doesn't go there, I show you exactly and paint it and explain it what it's going to look like if it doesn't. So the one thing I want to leave you with today, no matter what currency, Forex, ETF, etc., here's just a few I called weeks in advance that we were going to get these retracements of hundreds, even 1,000+ pips or more on multiple pairs to buy these weekly PAI hooks. Well, Gary, what if I want to get in? It's going to be a little bit, it's going to bounce off of this before I officially get this strong hook. That's where the lower time frame hooks come in. And we're able to do this day in and day out without fail. Impressive. So as we go through and we can say, okay, well, Gary, I'm more interested in the S&P. I'm more interested in futures. Well, we have futures for you too. We have it all. Here's GDX. Here was one I called in class when this started to bounce. People say, well, you think this is going to go up? I said, it's going to go up to at least the sweet spot, but then it's going to reverse and go down and make a new low, and my target's down here at the cloud. I don't know if many of you like the Ichimoku cloud, but when you marry it with the trend momentum and the PAI indicators, it makes any trading system far superior. So you can take the world's most successful trader, and he doesn't use indicators or a system or any system he may use. You add this to it, it will make it even more successful. And what I love about Ichimoku, it gives you visual pictures of reversals and areas. Well, how do I know it's going to hit this in reverse or go straight through it? That's where the cycling time frames come into play and the signs and symptoms they exhibit. So why is a PAI hook and a trend momentum cross so important? Because from the swing point low to the swing point high, we knew GDX was going down here weeks in advance, days and days and days in advance. We knew it was headed down here. Why? I had a PAI hook and a trend momentum cross, slope, angle, separation. And it was way up here and we called it. Now it was started to turn up here. How did I know it's not going to bounce and go on and make a new high? Because the daily turned, but the trend momentum didn't cross. And I painted the picture as it was bouncing. I said, take profit, look for it to run up here and then reverse and come back down here in advance. Long when this started to bounce here, like where's it going to go? Down here. But it's going to go up to a sweet spot. So notice, I don't care if you're using higher time frames or in this daily time frame when it started to turn. I knew to look for a retracement to the sweet spot, but then look for it to reverse and fail. And I painted this right here. I said it's going to go up, it's going to turn and hook back over. Money flow at best flattened out. It didn't turn and go up when this started to go higher. So that meant there were some buyers, but not overall powerful buyers, that it was due to go down. Why? Most important reason, because the weekly trend momentum and PAI are down. That's why weeks ago we knew that GDX was going to reverse and go into this sweet spot location. And this is on the aqua color line. I know these are busy slides, but this is what I use in our class to explain how the time frame cycle and what each time frame was going to look like. I paint that Picasso. Treasury bonds. How do we know this is going to break down? Because I told my students this was going to go up to sweet spot and break down and start breaking down much further. To expect the daily to engage lower. Audience, I have a question for you. How can we anticipate the behavior of the daily starting this slingshot lower, making lower highs and lower lows? Should be one reason and one reason only. What direction is my weekly? Smoking to the downside with angle separation, everything there. So the tactic for the S&P, or in this case, sorry, 30-year bonds, is to sell 4-hour slingshots as long as that daily remains pushing lower. And then the daily reversed here, and we said, why would we expect the daily to do this and slingshot lower? Because it's trying to depressurize, we like to call it, against a weekly that is strongly moving to the downside. So we know days in advance to look to sell that daily slingshot. And where did it go, ladies and gentlemen? Like clockwork. I got a PAI hook, I got a trend momentum cross. It went to the sweet spot before reversing. Well, how do I know it's going to reverse there and not go to a 50 or a 61.8 or more, or reverse and go to make new high? Because the time frame cycled and it engaged on Q, and of 1,000 trades, 800 or more, 850, maybe even 900 are going to do this mechanism, then reverse and go this direction. Because in order for this to go and continue deeper and deeper and make a new high, that weekly must reverse. And during the day that it bounced, the weekly was not reversing. Not only didn't it reverse, it didn't even flinch. So when that behavior is designated, you know it's going to slingshot lower. That's why marrying these two are the most powerful system anyone has ever seen. And if there's anybody that doubts it, try it. Proof is in the pudding. Every day we call these types of trades. Right? So let's continue. We have what we call a market scanner. This is our slice of heaven finder. It includes scanning the markets, and you can see several things are setting up on a daily time frame. Well, Gary, what about a weekly or a monthly? You can go into the properties tab, and you could tell it to cycle. For those of you that like higher time frames, you could tell it to go to a monthly, and it would say a monthly, weekly, and a daily. That's where I like to fish. And if there's no findings where the monthlies are overbought or oversold, then I march to the weekly. And I look for the weeklies and the dailies, etc. So what if I'm a scalper? I can set it as low as 15 minutes. If all I want to do is scalp and make a couple of points or a couple of cents on a stock, I'm a day trader, and I just need a few cents, then all I need is my PAI hook, trend momentum cross, and I know I can find these without even looking based on the scanner. And of course, the lower the time frame you go, you're going to get hundreds of results, not just a handful, as it's still cycling through Apple, different stocks, Treasury bonds, etc. That's just one of the multiple tools available. But one thing you'll know, I don't just come up with a different system every day or every week. I use the same system and I add new tools to it. Phenomenal new tools. And what I promised my students many years ago, I said, this will be the last system you'll ever need to be successful. There will never be a day that the markets throw something at you that this system can't anticipate, whether in the past, future, current, or far out in the future, because this system takes into consideration cycling time frames as they cycle from one extreme to the other, and it takes into consideration how they're cycling. So what's the other trade option? Let's go to gold. I showed you GDX. Well, gold is obviously moves in similar lockstep with GDX, or even black gold for that matter. Doesn't matter what you trade. We have a little bit for something for everyone. Why did black gold stair step and then start this reversal? Any guesses? Because the reserves were depleted. Because of the nuclear threat. Because of the hurricanes. Man, that's it. That's the ticket. Because the hurricanes shut down some production. That's why it reversed. Well, it's just a simple matter of following the direction of the cycles. And it does call tops and bottoms, whether it's a true bottom or just a temporary reversal to a lower high and a lower low. It's a market reversal with the highest of probabilities. So what happens when I get a weekly pushing up? What type of behavior is the daily going to exhibit? When a weekly starts to move from oversold to overbought, what type of behavior is the daily going to exhibit? It's going to move from oversold to overbought, and once it gets up there, it's going to end up slingshotting higher. So I don't think black gold is quite finished yet to the upside, but long term, I clearly see us getting a lower high and a lower low as we start to break below this 43.60 range, and we're going to run into the cloud, find resistance. Once my monthly starts to turn over and my weekly reverses direction. So for now, buy the dips in the uptrend. Once the weekly gives us a PAI hook and a trend momentum cross, that automatically tells me my daily, 4-hour, etc. in alignment. Well, what is a slingshot? Same scenario. When you get a slingshot up on a weekly, how does that happen? How can it go from a steep slope and then automatically reverse and turn back up? Actually, I'll put it through the actual chart itself and show you. How do I know? Well, I know once my daily starts to reverse, that's what can force, and the only thing that has the potential to force the weekly up. But it needs to just more than reverse, it needs to move from oversold to overbought to force the monthly to engage. And we called that in class. Why? Because the daily over here was reversing, and as it bottomed and reversed off of this low, we got a double bottom here, as it bottomed and reversed, it started to hook, and it came back down, and my trend momentum flattened but never crossed back over, and all of a sudden we got another fresh hook. Why did it turn down here, Gary? If I'm in buying this, how could I have known it was going to reverse a few days earlier? How could I have done that? Watch this. I simply just follow the cycles of the time frame. So as this turned and hooked, my 4-hour, 1 hour was in agreement. So I'm going to move it back over here, and let's see if we can get to a 4-hour. Hopefully it goes back that far. But if not, you can bet you the 4 hours reversing going up, and then it slingshotted lower, forcing the daily to pause. And then it went on to then push higher because my weekly was starting to turn. So watch when you put it over here and the weekly starting to turn, right about there, and in between there and this line here. So it'll be to the left of my daily, but it's because the daily started to slingshot the other way. I mean, reverse the other way. And this is typical behavior. So no, we don't just tell you, well, this is a definite bottom. It may not be the bottom because it rallies and then makes a lower low, but it's definitely the ebb and flow. And when money flow turns up, when there are more buyers than sellers, it's going to go higher. And the 4-hour will give you a chance. Well, how do I know when it's going up? Well, the 4-hour reversed and went back down temporarily, cycle. But when the 4-hour joined the daily back up, boom, there it goes. So it's all about following the signs and symptoms of cycling time frames. All right? And I don't care, again, what you want to trade. We have something for everyone, whether it's Forex, futures, stocks, commodities, ETFs, you name it. And as I go back to the PowerPoint presentation to show you what specials we have, this was just highlighting what type of behavior you would expect these PAI hooks and trend momentum crosses to develop on the lower time frames. Here's the slingshot phenomena. Over and over and over, and it repeats. Well, Gary, how do I know when a weekly is cycling down, how many times the daily is going to repeat that behavior? You watch how long and how far the weekly continues to push. And then here, why did the weekly turn over and slingshot lower a few times? Because the monthly was pushing. This software does it for you, but all you got to do is set up a profile where you can set multiple time frames, and at a glance you can see what they're doing in succession. And again, this is just what I was going to show you, but I'm going to spend a little bit more time on just flat out results. And this is another one with gold, whether you're going higher or lower, it's the cycling time frame. Here's a trade on gold. We made over $128 move. Not a $128 trade, a $128 move to the upside, and it was utilizing the software in the auto entry system. Then here's one that's going to the downside. Once we reverse, $126 move, excuse me, I thought it was 128, 126. Here's one where you get your trigger and you get your PAI hook, trend momentum cross, and we went down. How did I know to stay in this? Because the time frames on the higher end are cycling lower, and it did the expected behavior, and here we generated a $150 move. Here's one of my students that used TradeStation, and he uses the signals from our software, and he placed multiple trades across multiple currencies, and he made 8,600 pips. Because the higher time frames were still in the direction of his trend, he continued to let them run, and it went up to 18,000. Here it is in that same platform. Now, if you tally up all of these totals, it's over 18,300 pips. Gold back to the upside. Again, it doesn't matter. There's a $110 move. Here's pound odd, which we're long now, but we were short, 778 pips. Look at the success of these trades over and over, all of the different currency pairs. And it doesn't matter what you trade. We do it on everything. So here's one pound odd, 1,274 pips, a continuation move. And then it didn't stop there. It continued further to over 2,200 pips. Well, how do I know I'm going to stay in this thing and make that many pips? You follow the cycles and the signs and symptoms of those cycling time frames. And then the pound odd wasn't finished at 2,200. It went to 3,600 pips. Well, how is that possible? It's possible through our slingshot phenomenon and following the cycling time frames. And again, we could show you this thousands and thousands of results. Pound CAD, 3,000 pips. Pound yen, 3,200 pips. Here's a breakout system where you put a bracket, and whether you don't know if it's going to break higher or lower, well, you would lean the direction of the cycling time frame, but you can set it as a bracket order. If it breaks high, it goes long. If it breaks short, it goes short, and automatically trades that for you. Use it for stocks, use it open range breakouts, etc. It doesn't matter. 272 pips. Now, successful option trading. I have students that trade options, and I hear all the time, options traders should never use an indicator. That's crazy. Well, it's because of the movement of the underlying stock that options, and there's volatility and other things that play into it, sure. But here's where he said he would pay $1,200, and he got out a little early, then got back in for $300. And without the software, he'd have kept going, and he'd have bailed on it when he was in a loss or a losing position. And he was so thrilled with the system that he's going to utilize it to cancel his newsletters and his financial advisor, and he applied for a Forex account because he was normally an options trader. But we showed him the advantages of trading Forex as well. And as we look through the software, you get the software classes, and we do trades in class, and I send out alerts verbally while we're in class that's set up over time. So that's the beauty of this. I can tell you when a trade alert's going to happen a day later, a week later, a month later, based on those cycles. So what's included in the software? And I didn't get a chance to touch all the market scanner you didn't see. You saw the slice of heaven finder. You saw the trade trigger on one of the charts a moment ago. The trade management system, scalping, we got several scalping systems for those who like to scalp, Platinum Asia, Triple P scalping system, and that MPA breakout system I reviewed. Top 10 reasons why you should use the MPA software, because it calculates and support and resistance levels automatically. It identifies the trend of each time frame. It monitors and tracks time frame cycles. It provides consistent entries, exits, take profit levels based on the software triggers, slingshots, and profit targets. It also can be set in advance so that it does it automatically. So it's set it and forget it, or you can trade when you see a setup, instantly enter at that point. It fits any trading style. It has dual scanners. You saw one of them, but that sets up the next big trade. It works on over 800 symbols, including stocks, Forex, futures, ETFs, commodities, etc. And it consistently delivers low risk, high reward, high probability trades. So why are we here? We want to give you a special offer. For today, we're going to offer a monthly prescription or subscription to our MPAPE3 Master Trader program. For $297 a month, you're going to receive the software and all components in which you didn't see but a fraction, and our live trading class. In the live trading class, we meet 6 to 8 hours per week of live instruction, and it sets up, well, Gary, I work and I can't be in the live class. Well, you look at the archives for your viewing pleasure, and it tells you, and I tell you exactly what time frames and where to expect the software to anticipate the move in advance, so it doesn't like you have to be in class in order to take advantage of it. These set up days and weeks in advance. And in order to subscribe to that, you need to use this https://www.gpatrading.com/premium.class. We've posted the link for you. So I'll leave you with this in closing. As the previous announcer went over 3 minutes, I probably won't take that long of the next person. Trial membership, we're going to give it away, a free trial membership, to the first person to enter in the chat dialog your first name, last name, and your email address. I must have a first name, a last name, an email address, and the first one to enter it gets a complimentary trial membership to our superior service. I want to thank you for attending the webinar and look forward to you joining us. And remember, the MPAPE3 software, Market Price Anticipator software, empowers you to read and anticipate price in any financial market on time, in time, all the time. If you have any questions, please submit those to support@gpatrading.com. And just to leave you with this, we have over 116 countries and counting that represent our GPA trading family. We'd love to have you join us. Take care, and I want to thank Traders Talk for our opportunity to speak with you, and I want to thank each and every one of our participants for attending today, and God bless you.